Yeah, hi everyone. I am Rubina. Today I am going to give the presentation on new asset accounting. So, as per my knowledge, I am sharing this topic. So, here in asset accounting, we are having the different types of configurations. Firstly, we have to know about the organization structure and we have to define the chart of depreciation, and we have to give the input tax and output tax, that is assign input tax indicator for non-taxable acquisition, and also we have to assign that what we have created the chart of depreciation to the company code, and also for the automatic posting purpose we have to define the account determination, and we have to define the screen layout rules also, and for those we have to define that number ranges for the assets what we have created, and also we have to define the asset classes, what are the classification of assets we are taking. We have to define the classes of assets, and also for those assets we have to create the GLs related to that assets, and also accumulated depreciation GLs and depreciation GLs we have to create, and also finally we have to do that account assignment. So here down we can use different types of methods to calculate that depreciation also. So we have to define a depreciation key first, and then we can calculate the depreciation through the defined base method, or else we can use that multiple level method, or else different types of methods, WDD, that is we can use it, and multi-level method, so different types of methods we can calculate the depreciation, and finally determine the depreciation area in asset class. So for one classification of asset we can define one area as per our depreciation areas what we are considering, whether it is a book depreciation or tax or something like that. So finally we have to assign that forms, and finally we have to assign that settlement profile to company code for AUC, that is asset under construction. These are all configuration involved while we are doing the asset accounting. So just we will move on to the organization structure down. Yeah. Yeah, I'm a little bit upside, Gayatri. Scroll. Yeah. See here, actually, why this asset accounting? Why this asset accounting is required first? Generally, this while we are doing that. In FI accounting, that is in finance, to transfer that asset into the finance. That means here the asset accounting FI to AA is a component used to manage and supervising fixed assets. Here to show that fixed assets in FI module, that is asset accounting. Here we are taking this new asset accounting module. That means here this what this asset accounting will do means it will show these assets into the FI module. What exactly to I mean to say is it serves as a subsidiary ledgers to the FI general ledger, providing detailed information to transaction involving fixed assets. First, in the FI, we have this general ledgers now. So to show this asset classifications or asset values into the FI module, so we are using this asset accounting. And also as a result, the integration in R3 system, asset accounting FIAA transfer data directly to the form of other R3 component. For some posts, it is possible to post from material management. See here, he has given to post that asset value from material management to FI. We should take that integration FIA. That means the integration that not exactly, I mean integration, that asset accounting will be shown in FI module through this new asset accounting module. So here, first suppose asset is purchased or produced in a house, you can directly post this invoice or goods receipt with in the new asset accounting. That means through FI module, we can post it in a accounting component. At the same time, you can pass the depreciation and interest directly to the FI accounting. That means to show the depreciation and to show that interest value for that proper asset depreciation and interest value, we can flow through this asset accounting into the FI accounting. So that's why we are using this asset accounting. And also for plant maintenance, we will have some amount. So to flow that amount into that FI, we can use this asset accounting. So to show it on the balance sheet, mainly this asset accounting is used. So that is the purpose of this asset accounting, why we are using it to calculate the depreciation, to show that interest into the FI, we are using this. So come to that organization structure. Yeah. Yeah, the asset accounting module is implemented for the following companies. Here we are taken one company code. That company code is related to electronics. We can take some other company code that is related to the some other plant, like that. So we can take in the organization structure. Here he has taken 109 ABC electronics he has taken. So first, while you are defining that asset, we have to define that chart of depreciation. See here this chart of depreciation is used generally. This is the highest organization entity in the asset accounting. This chart of depreciation is it consisting of list of depreciation areas arranged according to the business and legal requirement. That means it consisting of depreciation areas means book depreciation, tax depreciation, and as per the legal requirement and business, these depreciation areas we will use as per our requirement. And also to manage the valuation of assets for a particular country, this chart of depreciation is enabled. And also to manage the various legal requirements for the valuation of assets, this chart of depreciation is used. And also he has given that refers to the chart of depreciation for each country. They have different depreciation areas and depreciation keys depending on country specific requirements. That means depend upon the different countries, we can choose different depreciation keys, will have different depreciation keys and different depreciation areas. That means finally he wants to tell that for different countries, different depreciation areas will have, and different depreciation keys will be there. And then scroll down, Gayatri. Yeah. Cannot use this chart of depreciation directly. You must create your own depreciation by copying reference chart of depreciation. See here we can use it directly if we want that particular depreciation related to that particular country, or else we can change that copy the depreciation and we can use it. That's what he has given that. And then so that means finally you want to tell that we should not use that Indian depreciation method same just like to the US method. So that there may be variation of that depreciation methods, calculation of depreciation methods from one country to another country. If you want to use that, we can copy it and we can use that. That's what he has given the information. Then scroll down. Yeah. Specific, he has given that depreciation, each depreciation area is book depreciation or tax depreciation, or you can define your own depreciation. And also these depreciation areas are defined with the 2-digit numerical keys. So we can define any 2-digit numerical keys, we can take it. And also we can the numerical keys represent depreciation term that you can enter in the asset master record or asset classes. So these numerical keys, we can give it in a asset master record, or else we can give it in a asset class also. And also this he has given one shown Let's scroll a little bit down. See here this he has given chart of depreciations, and another side he has given that chart of account. That means under the client, we know that the highest organization structure is client. So that under that one client we are having depreciations, and another side we are having the chart of accounts. So under that chart of accounts we are having number of company codes there. Here under this depreciation chart of depreciation we are having book depreciation, tax depreciation, and cost account depreciation, and group depreciation. So he has taken different he has for country A he has showing that these are the depreciations available for that country A. And then so, and see here he has given US and different countries he has shown that. So country he has taken one company code. Under that one company chart of account is there, and along with that one depreciation chart of depreciation is there. And under another second country there is one company code and one chart of account and one depreciation he has taken. And also say like that for third and fourth countries also he has taken one company code, chart of depreciation, and chart of account. So like that he has described under a client how these company codes, how these chart of depreciations are allocated. So see here. These depreciation areas for each country, these are predefined. I already told that is nothing but book depreciation and tax depreciation, and different types of depreciations will be there related to the particular country. Each company code uses one chart of account and one depreciation. So as we shown in the picture, that one company code having one chart of depreciation and one chart of account. Yeah, scroll down. Yeah, see here, I already told you that this FI is having the general ledgers. Here, FI to A means we are posting this FI, whatever the information stored in the general ledger, we are throwing through put that information in FI, that is in general ledger. First, we have to use this AAA is nothing but asset accounting. So this asset accounting is used to put it that information into the FI. Here the under this FI to A he has taken depreciation area 1, 2, 3, 4 like that he has taken. So some amount of depreciation is being calculated. So to generate that depreciation, here both the AA and FI is involved. So we can generate that reports under that FIAA reports, nothing but asset accounting reports we can generate it through the FI. And also here under this FI we are having this general ledgers, and here financial statement versions. That means here also the FI module is completely involved to get that financial statements. And also finally here financial statements for taxes report for internal management. Here this is used to know the taxes exactly, how much taxes are involved in this financial statements, and this is used for internal management report for the internal management purpose. These two outputs will get by this FI to AA depreciation areas and balance sheet. How the internal process will happen by taking this calculating this depreciation area and put it on a balance sheet. Finally, financial statement for taxes and report for the internal management, these two purposes. And then scroll down, asset transactions are often valued differently for different purposes. For example, different valuation approaches may be used for see here, just now I told you for the balance sheet tax purpose and for the financial statement. So these asset transactions are been happening to do that financial statements according to the local requirement, and also for the balance sheet for tax purpose. For these two purpose, these asset accounting are often valued differently for different purposes. So that's what. And then here he has taken ABC is the chart of depreciation defined for the company ABC Electronics in USA. So here he has taken one country considered, that is USA. Under that one we having a chart of depreciation as ABC. And so he has taken, we can go through that transaction code EC08, or else we can go to that financial accounting, asset accounting, organizational structure, and copy reference chart of depreciation. So we click on that copy reference chart of depreciation. We directly go to that screen EC08. So that to copy reference chart of, we can copy that particular chart of depreciation, or else we can create our own depreciation. That's what he has given the information above. Scroll down a little bit, Gayatri. Yeah. So here he has taken for chart of depreciation ABC has taken. For the company, sorry, for the country, he has mentioned that from this country, from chart of depreciation 1 US, he has taken this depreciation to the chart of depreciation ABC. We have to click that, save, and then see here organization object chart of depreciation. See here action carried out. Uh, we already copy and reference the chart of depreciation in the above. So then we can move to the next step, specify or a description of chart of depreciation. That is second option. If we move to that, means we can here specify one name, chart of depreciation Rubina, chart of depreciation some XYZ. So we can mention the description, specify one name to that particular chart of depreciation what we have created. That ABCD has taken from 1 USD chart of depreciation. And then scroll down. Yeah. Yes, here we are defining the chart of depreciation areas. So under that we can our chart of depreciation is ABC, and then here down he has taking here choosing some of the depreciation areas, whatever the depreciation areas we want, we can put it here. So we can copy that, and we can save it. That means for our chart of depreciation, these areas is being copied so that we can understand. Then scroll down. So here he has for book depreciation, he has considered one GL here, that is GL one. So for remaining, he did not choose any GL. That means for this for a particular asset, we are calculating through the book depreciation area, we are calculating the depreciation. That means that's why he has chosen one there, remaining all zeros. Okay. And then we can save it. And then so up to now we created chart of depreciation and also depreciation area. That means on which basis we are calculating that depreciation, whether it is book or tax, or on other basis we are. But here we have taken book depreciation. Okay, we can save it. Then we can move to the assign input tax indicator for non-taxable acquisition. So we know that while we are purchasing and we are selling, we may get that input tax and output tax. We all know, familiar about that. So to go to that assign input tax indicator, we can go through the path, or we can go for OBCL. So we can take related to what is that company code, what is the company name, exactly what it is, and the city where it is related to, and what is the input tax V naught and A naught we have to assign here. So it will calculate the input and output taxes when we are doing that configurations. Then yeah, here assign chart of depreciation to the company codes. Then we have to assign whatever the chart of depreciation we have created. We have to assign that chart of depreciation to our company code. So yes, here he has taken company code, company name, and our chart of depreciation, and we are elaborating, that is giving the description, so that if we save that, company code is assigned to the chart of depreciation. So now we have to move to the define account determination. So Why this account determination is link of asset master record to general ledger accounts. That means to show it in a general ledger accounts through this asset master, this account as determination is important. We know that automatic posting purposes from asset master record to the general ledger, this account determination is important. To post it automatically through accounting, we can do it. So this account determination key and description are entered in these steps. When posting is made in an asset, the system determines the GL account that are posted based on. So that means why this account determination means particular GL related to that transaction, it will find out and it will post it in general ledgers. That is the use of this account determination. What exactly? And to that account particular GL, this account chart of depreciation will be there, and chart of accounts will be there, and particular business area will be there. So this all will be linked up for the GLs now, so that while we are doing that automatic posting, we will link up this GLs so that it will post it automatically. So this one we can go through that financial accounting and asset accounting and organizational structure and asset class, so that we can go to the account determination through these asset classes. Here we are taking that account determination. We can't at every place we can't give that land is related to the we can't give that description now. So that's why purpose to do that automatic posting, he has give assigning some A1 triple zero, A2 triple zero, like that. He has assigning some numbers along with letters. He has giving for the account determination. He has mentioned that assets, whatever assets he has taken: land, business, plant, machinery, furniture and fixtures, vehicles, and asset under construction. See here, he has taken land. Land means not only one land. Under these lands, we may have land one, land two, land three, like that. So many lands will be there. That means that is one asset class. Under asset land is a asset class. So under that, so we may have so many lands. And also building means so many buildings will be there, and also plant and machinery. I like that only so many assets will be there under that asset. So those are all sub assets. We can consider that one as, so that is called as a sub asset. Here he has taken 6 assets, that is including the asset under construction. Scroll down. So he has assigned that account determination to that assets. Why? Because to post it properly, to pick it correct, what exactly depreciation we have assigned to that particular asset, what the chart of account we have assigned, what the company code is related to that. So for all this purpose, to know that information, this account determination is being given to that particular asset. See here, specify screen layout rules. So we know that in generally in FI, what we will do, we are having field status, isn't it? Why this purpose? To have that whether to have what we call, whether the option field should be optional or in suppress or in mandatory. So to give it that like that only, in asset accounting, we will having this screen layout rules. So through the screen layout rules, we can give that particular field, whether it is suppress or mandatory or like that. So here, see here, asset master is recorded. The screen layout rules determined if fields or required entry or optional entry. See, that's what I explained. Optional or required or suppressed completely, we can give it in a screen layout rules. In this step, the key and the description of the screen layout rules and entered in this step. The rules of the screen layout are defined at the lateral step. Okay. See here, that's what to give that, whether it is a suppress or mandatory or required or optional, to give that we can use that screen layout rule. So we can go through that path also. So in the organizational structure under asset class, we are having the create screen layout rules. So here he has taken that screen layout rules. Under that one, he has taken that land A100, A200. Just like at account determination, he has taken chosen some numbers. So he has assigned this all. Then move little bit. Then if we click on land, then we may go through that. Yeah. So here, if you select that land and we go through that screen layout rules, so here we are having this finance accounting, asset accounting, master accounting. See here, if we want to change any field, we have to go through this path. So, or else go A77, we can use the transaction code. So to define that, before we have to go through that path upside what I explained. To change that field, to give it in mandatory or suppress or required or optional. So we have to go to that OA77 T code so that we can little bit scroll up. Gayatri. Then we can go to directly to the screen layouts. Directly to the screen layout, we can go it down, scroll down. Yeah. So we can go to that screen layouts. Under that one we are having logical field group and field group rules, so that if we click on that one, so we may go directly to the plant and machinery. What are options we have to give it as mandatory or suppression or whatever might be. So here, see here, select A300 and click on logical field group. Move, scroll down. Logic field group is nothing but we are giving that options. Yeah, see here, here logical field groups and field group rules. So whatever the for that particular plant and machinery, we are having the logic field groups as general data will be there, posting information will be there, time dependent data. So whatever the data we are choosing, we can show it. So if you want to see that particular field, that is to particular layout, we have to go to that field group rules and we can select the general data. That is, for suppose if we are selecting plant and machinery means, we can go to that logical field group and we can select that general data we want or posting information we want, whatever the time dependent, just like the tabs we are having for BP or some other. So he has given here display field only. So he has given display field only. What happened the if we select that indicator, and if we select that entry allowed in asset class, so what the thing happened, and also transfer entry from main asset number to sub number. So scroll down, Gayatri. So these are all the options we can give it, that is display free, field only, entry allowed in asset class, and transfer entry from main asset number to sub asset, and also for the maintenance and entry allowed in a sub asset number, and copy field group from the reference asset. These are all fields available, so that we can click on that, we can act, that is in suppression or in required, we can put it like that and scroll down. This is the use of this screen layout tool, just like a field status. Um, if you go through that, we can come across, we can understand easily. So for what purpose it is. Scroll down. Yeah. See here field group rules he has given. So under that one, see here description one, he has put it as a required, and for description two, it is optional, and for general long text, he has given optional. So like that, we can mention as per our requirement basis for the plant and machinery. He has considered under the screen layout tools, he has mentioned all this as a optional, required, and so mandatory, and this all he has mentioned. So we can make the relevant fields required optional and suppress. That's what this is a use of the screen layout tools. And also we can select any screen layout and change the field status based on the requirement. So we can change it that the field status based on the requirement of the client. And also see here, while we are if we are doing this asset accounting, before configuring the controlling module, Then we have to go to that logical field group and time dependent date and select cost center as a optional. Why? Because if we are doing before doing that controlling CO module, so we have to put it as a optional. Why? Because if we did not put that as a optional, it will throw the errors of that controlling module. So we have to put it optional before doing of that CO module configurations while we are doing the asset accounting configurations. Yeah. So that's what he has mentioned. Yeah. So here he has taken that. Yeah. So here he has taken field groups. Wait. Yeah. Upside. Scroll upside. Scroll to up. Yeah. Yeah. See here in under that plant and machinery. So he has taken that our license plate number and cost center, plant and business areas. So whether to activate this business areas or plant center or a first we have to put it in optional. He has shown that. Why? Because we will get that errors related to that CO module. So we have to put it that in a optional as a cost center and then scroll upside. Yeah. So here we are defining the number ranges for the different classes. We have taken classes is nothing but for the land, for the building, for the plant and machinery, for the furnitures, for the vehicles, and for AAC. We have to create that number ranges. So we know that for everything we have to create the number ranges, or else we cannot post that. Document and see here yes we can go through that AS08 T code and under that AS08 code we can choose that particular company code and we go to that intervals. Scroll down, we can assign that for buildings. For building we have to assign that number ranges here in the number ranges here and then scroll down. Yeah, see here, define asset classes. So as of now, we are telling that asset classes will be there under that assets. So asset classes are nothing but a classification of that assets. For every asset assigned to only one asset class. So that means for suppose building is there, building 100 is there. That means that building will be assigned under the building only. Building is the main asset class. Under that one, number of building one, building two, building three, like that, it will be there. So, like that, for suppose plant and machinery is there. Plant and machinery 98 is there. That means it will be assigned under the asset class plant and machinery. So many plant and machineries will be there. So, like that, he has given here a class building is there. Say under the building, we are having thousands of building, 1000 buildings are there. Under machineries here, 2000 missionaries are there and under fixtures and fittings we are having 3000. So like that and under one classification of assets number of assets will be there. So for all this one we have to create that uh, number ranges for that one asset and also we have to give this screen layout rules we have to define and also we have to define the account determinations for these assets and we have to give these GLs whatever the GLs we needed to post it automatically we have to assign it in automatic determination. So these are all have to be done. Scroll down, that's what he is explaining there. Here this asset under construction and low a little bit upside Gayatri. Yeah, see your asset under construction is there. So now how many assets under construction means there are almost 4000 assets are there which are under the construction and 5000 assets are there which are low value of assets. Low value of assets is nothing but which we calculate that that asset as an not an asset. That means for suppose below 1 lakh we won't consider that one as a asset. So as per in our company we may have one certain limit. If it is above the 2 lakhs rupees only we can calculate for that one as a depreciation for that asset depreciation. Along with that one we can consider that one as a asset. That means so that is low, that is called as a low value of asset. We can call that one as a which is not in a considered amount. So that is called as a low value of assets. Here Each asset is assigned to only one asset class. See what I explained, and you can specify set and control parameters and default values for depreciation calculation and master data in each asset class. So we can calculate the depreciation and we can give it in master data, and we can select some parameters, and under one asset class only we can define one asset. That's what he is giving. And then scroll down. Yeah, see here he has through the path to define that asset classes. He is giving that path, financial accounting, asset accounting, organizational structure, and asset classes, and define asset classes. Or else we go to the transaction code OA, so that we can define that asset class as A1000. That may be land, that may be building, that may be some other asset class we can take here. Asset type we are giving that account determination, what we have assigned their account determination to that particular assets. We have to give that what we have account above screen layout, we have to give it here. And also a number range, what we have taken that number range for the land, we have to give it here. So include assets, whatever the assets are having under the land, we are including that asset. But while we are doing that fixed assets, we have to take that no asset under construction, we have to pick that option. But while we are doing for that asset under construction, we have to deactivate that option, and we have to give that line item settlement while we are doing AUC. And then to manage that historically, that means whatever the financial transactions related to that asset happen to show or to look that into that transactions, we can give that manage historically option, we can select that. And then click on save. And then like that we have to see here he has given the sub asset created under an asset following internal number range assignment for all the asset classes. Hence, option will be the external sub number is not checked. See here we have to give that as a internal number range for all the assets. If we are creating the sub assets in the asset class, so that we can give it as a internal number range. So just like when we are doing that number ranges, we may have that internal number range and external number range, so that we can take it here as a internal number range to have the same number range for the that is same number for the subasset and the that is main asset. Main we can't call as main asset, we can say it as asset and subasset. So same number ranges will be given, so that if we click on internal, that's what. And then we can save it. So then next we will move to the yeah, just like the land, how we have created that asset class, we have to create that for billing also. For billing, we can take that asset class, and we can what the account determination we has given above. So we can give that account determination and screen layout rules. We can mention here. That is for billing, and also number range is 2. We already we have taken above, and we can include assets and no account asset account under asset under construction, we have to take it, pick it. And then scroll down, just like we can manage historically and save. So like that for all the land, machinery, plant and machinery, furniture, vehicles, for all this, scroll down, Gayatri. We have to give this data, we have to mention it. See here he has given number ranges. Number assignment is nothing but we have to give that number range 03 here. And again same, just like account determination and screen layout rules also, we have to give it there and choose it the no account that is no asset under construction. So yeah, yeah, so for the furniture and fixtures also we have taken like this only. Yeah, move it, save it like that. Yeah, here also for the vehicles we are same options, we have to take it so that we here the number range is 05. and and then we move to asset under construction. See here, yeah, here we should not take no under no asset under construction there. Those are all the fixed assets, that's why we are considering that that one as a no asset under construction. But here it is we have to take out that option, and we have to give that line item settlement, we have to pick it here, and number range for this one is a 06. That's what. And then So like that we have to mention that asset classes for each fixed asset we have to mention. So here we have to create so many GLs also in this while we are doing this asset accounting. And generally, here for this, he has taken GLs, some GLs, what the GLs have created, I will tell you. So here he has taken, he has created a GL for the land and GL for the building and GL for the plant and machinery and furniture and fixtures, one GL and vehicles GL and asset under construction GL. These are all comes under the fixed assets. So he had created the one GL for one fixed asset, and also he has given one currency for the particular asset. For suppose it is we want to do that INR, we can take it as a INR. But why we have taken that currency as a USD means before we have taken that company is related to USD, so that's why we have taken that currency as a USD. USD. So here again we have to create that recon what is that recon account type. So and then we have to mention that local currency no need, yeah. And also field status group we have to mention that one as Z067. We have to pick that Z0 67 is related to the asset, so that's one he has picked that is G067. Create accumulated depreciation account for each asset class, but it is not required for land and asset under construction asset class, or as we do not calculate depreciation for those classes. See here we are not taking the accumulated depreciation. Why? Because means we are not creating the why? Because those are classes. Little bit scroll, Gayatri. Yeah, yeah. So we are not creating that. Asset classes. Why? Because means accumulated depreciation account for each asset class, but it is not required for land and asset construction. Why? Because for land and asset under construction, we are not calculating the accumulated depreciation. Why? Because we cannot calculate the depreciation for those for the land and for the asset under construction. So that's why we are not creating any accumulated GLs for the land and asset under construction. That's what he mean to tell us. And then here and under that type and description we have to create this GLs for the accumulated we are created the GLs for the assets, fixed assets in the above, and here we are creating the accumulated depreciations for the buildings, for the plant and machinery, and for the furniture and fixtures, and for the vehicles. For all this we have to create the accumulated depreciation GLs also we need to create. And here also we have to take that field status group as Z067, and currency we know that USD. Why? Because we are doing for particular country. So we have to, so that means GLs have to be created for that particular assets. Along with that accumulated depreciation GLs also need to be created. And then yeah, and again we have to create, yes, create the depreciation expense account for each asset class, but it is not required for the land and asset under construction. See here, so accumulated depreciation also no needed. Why? Because we are not going to calculate any sort of depreciation for the land and asset under construction. So that's why no need to calculate that depreciation, accumulated depreciation. That's what he is telling to us. And then scroll up. Yeah. See again he is creating the depreciation for building, depreciation for plant and machinery, depreciation for furniture, depreciation for fixtures, and depreciation for vehicles. There we have created that accumulated depreciation, and here we are creating the depreciations. For this one also different GLs we have to create it here, and for this one under the control tab we have to take this sort key as 001, that is posting date, and also field status as a Z0, what that is so G001 we have to take that as a field status here. And also, and then again we have to create some other geos also, that is other income, that is other income geos. that is administration expenses. So loss or gain on sale, loss or gain on sale of asset, and asset sale clearing. So these three jewels we need to create while we are doing this depreciations, while we are calculating. Why? Because this has to be do this account assignment, that is for do that automatic posting. These three GLs need to be assigned in the account assignment. See, we will see down. So here we have created GLs related to the fixed assets, and GLs related to the accumulated depreciation, and GLs related to the depreciation, and also gain and profit on asset sale. Loss on asset sale, and also for the asset sale, we have created these three GLs also. So this all together we are going to create 18 GLs, I think so, in this asset accounting. So here account assignment. See, here only we have to do that account assignment, whatever the GLs we have created. So the balance sheet account and depreciation account are defined in this step. The account assignment for the account determination defined. See, here to go through that account assignment, we may go put it on that balance sheet, and to calculate the depreciation for that particular accounts, this account assignment is needed, must. And to go through that account, to define that account assignment, we have to go through that path: financial accounting and asset accounting, integration with the general ledger, and assign GL accounts. So that we are going to assign these GL accounts. So we can go through that path. And so here gain and loss arising out of sale and asset are defined in the retirement account assignment section. So here, if we get that any loss or any gain while we are selling that asset, that is nothing but after usage of asset for a long time, the asset will have the retirement of that asset. So while we are doing that retirement of asset, we may have loss or we may have gain. So that's why so asset are defined in the retirement account assignment section. So provide the chart of account depreciation. Go scroll down, Gayatri. See here we are going through that chart of depreciation, and we are taking that chart of accounts under that one. So we are put chart of accounts and chart of depreciation, and also under that one we are taking. So we are double click on the account assignment, then account determination. So if we go to that account determination, scroll down, then we will get that land. We have taken that account determination as A1000. So here we are going through that from the account determination, we have to go to that balance sheet accounts. If we select any one land, so that we will click on the depreciation, scroll down for that particular land. Yeah, here for the particular land under that account determination, we will get that for the land. Yeah, here we can assign these GLs. Here what we have created, that land GL 2010, we have given there. So down here under this retirement account assignment, while we are doing that retirement of that land particular asset, so we are assigning here loss on sale of asset, and also asset sale clearing, and also gain on sale asset and loss on sale asset. So this all whatever the tabs he is asking to us, we have to assign these all GLs to that particular land, so that we can have that account. If we assign this particular GLs only, so that we can have this automatic posting. Or otherwise, if we are not, if we do any mistake while we are doing this assigning these GLs here to that land, we may get so many errors. Okay. And then next move to that we can move to that building, like that only. In the building, if we select that balance sheet account, we go through that options, whatever the GLs we need to assign, scroll down. So here also, see here we are taking considering that building GL, that is 2020. And again we have to retirement account assignment. Here loss on sale of asset, we have to assign that GL. Asset sale clearing, we have to assign that GL. and gain on sale of asset and loss on sale of asset. So these all GLs again we have to assign to that building. And again like that only scroll down. Here for the depreciation here. Before for the land we did not pick the depreciation, only the balance sheet account. Under that one we have given that GLs, but here for the land, for the building we have to take the depreciation also. Why? Because for the building we will calculate the depreciation now. So that's why we have to give this accumulated depreciation on building and depreciation on building. So we know that accumulated depreciation is nothing but under one building so many buildings will be there now. So that main asset depreciation, if you want to calculate that all the buildings, we can go to that accumulated depreciation on building. Or otherwise we want to calculate for that particular building, we can go for that depreciation on that building. So that is the difference between the accumulated depreciation and depreciation. So we have to assign that two GLs. Why? Because we may check if you want requirement for suppose to that particular building, if you want we can pick that, or else for the all buildings I want to calculate the depreciation at the time. So with this account accumulated depreciation on building assignment must be important. So that's why we are giving these two account GLs assignments here. Yeah, then move to that next. In next we will move to that that is same just like for the plant and machinery also. We have to give that for the balance sheet account, the plant and machinery what we have created the GL 2300 we have to give. And like that only we have loss made for the asset retirement and for the sale of asset clearing account, and gain on asset and loss of asset, loss on sale of asset. So this all the deals again we have to give the depreciation also, accumulated depreciation and depreciation for that particular plant and machinery we have to mention it. So like that we have to give it for the furniture also, for the vehicles also same depreciation and balance sheet account we have to give this account assignments. Yeah. See here again here we have taken that furniture and fixtures we have taken 2040 GL account we are assigning here. So like that we are loss gain and clearing account. So we have to give here. So it's like that. And then for the account asset under construction, we won't take that depreciation. Only we will give that balance sheet. Yeah. For the vehicles, we have to take like that only. And for the here for the asset under construction, we have taken that asset and loss on sale of asset, asset on clearing, gain on sale of asset, and loss on sale of asset for asset under construction. And then down, we won't have any depreciation. Yeah, we don't have any depreciation. See why? Because we are not calculating any depreciation for the land and for the asset under construction. So these all account assignments are must ensured to have the automatic posting. So here, while we are creating this depreciation key, we must consider some of the factors and some of the parameters. So what are those for depending upon one method, whatever the method we are choosing, to that particular method we have to consider the particular parameters. So under that basic method, we have to we have to consider this depreciation type, depreciation calculation method, and treatment of end of depreciation. And then for the declining balance method, we have to consider these factors for determining the depreciation percentage, upper lower limit for depreciation percentage. And while we are doing for the maximum amount method, we have to consider the depreciation only up to a certain level. And while we are considering this multi-level, we can do for suppose if we do for land, we can calculate through that. Sorry, we won't calculate the depreciation. For building, we can do through the declining method. We can do, or else for the plant and machinery we can do through the straight line method we can do, so or else we can do through the maximum amount method. So we can do one sort of method for one asset we can consider basing on our basing on the requirement of the client, we can do that to calculate that depreciation. So while we are choosing that particular method, we need to consider these factors. So here multi-level method, valid period and base value and depreciation percentages. In the interview they will ask that must and should, while we are doing the term maximum amount method, what are the factors need to be considered, and what while we are doing that declining balance method, what are the factors need to be considered, he might ask that. And also for a period control method, acquisition, subsequent acquisition, post capitalization and retirement and transfer, these are all the factors need to be considered while we are doing that depreciation calculation. And depreciation calculation methods, scroll down. Yeah, so here he is defining one method. He is defining base method. For to go to that base method, we can go to the financial accounting through that asset accounting, through that depreciation value method and depreciation key, and through that calculation method. What which one we are defining means base method. So here we have to take that base method as is 0012, and then ordinary explicit percentage we have to consider there, and we have to take the type of depreciation, what it is, depreciation method what it is, we have to pick that with, which type of depreciation we are calculating and which type of method we are calculating, we have to pick it. Scroll down. So here, like that only here defining the multi-level method here. In the multi-level method, we are having the write-down method will be there and also straight line method will be there. But he has considered here under the multi-level method, straight line method, 10% he has taken. That means through that straight line method, we are calculating 10% of the depreciation. Or else we can take a straight line method, 15% we might take. So like that, we can give their percentages and then scroll down. Here we are taking the multi-level methods. Here in the level, he has considered a acquisition area. Why we are taking acquisition area means not for the certain period, we are not calculating for 2024 to or 2030 like that. We are not calculating, but defaultly it might take that 999. Why? Because means we could not mention that particular year, so that it is a continuous process. It is calculating continuously, so like that it will be taken as 999. So it won't take any here also, we can take it as 999. And also base value method we are considering, that is 01, and percentage, how much percentage we are calculating, 10. For suppose if we are doing for 15, we can mention there as a 15. Okay, so then we can give it as save it and then move. So again here see here he has write down depreciation under the multi-level. He has taken for straight line for 10% above. Now under the multi-level only he has taken that write down depreciation. So for that one, actually under the multi-level method we will come across straight line method and right hand method depreciation. So these two depreciations will be there under the multi-level. Here he has taken that write down depreciation as a 15%. And also then we will move to the levels. Here also he has taken a acquisition area year, has taken year by default we have to take it that 999, that is 999, and year also 999. And also for the base value he has taken as 24, and percentage he is calculating as 15, we have to take it. And then depreciation key, so we have to define that depreciation key controls. Why this depreciation means, it will calculate for the purpose of calculation of depreciation for each asset and for each depreciation area. This depreciation key is important. So why we need to define this depreciation key? If interviewer asked to us means to define that, to calculate the depreciation for the particular asset for under the particular depreciation area, to need to calculate means this depreciation key is needed. We have to define the depreciation key, and then this depreciation key will be done in AFAMA. And then here so going through that T code, we can define the depreciation key. Here he has taken under the depreciation key, that is he has taken straight line depreciation 10%. He has assigned that, he has defined in that depreciation key. Scroll down. Yeah, assign of calculation. Yeah, see here he has taken that for that particular straight line depreciation 10%. He has defined that depreciation key. Under that one, what the method, through which method we are calculating that depreciation, straight line method, and also base method. Wait, yeah, wait for a minute. Yeah, see here base method, and then what's that multi-level method, 10% he has taken. Class, that is a straight line depreciation, and this all need to be give that options need to be selected. See here he has given that shutdown, down he has given why this asset shutdown is required. If you want to shut down that depreciation calculation for a period, for a period of while, for particular periods, so we can give this option as S, so that the calculation of depreciation will not happen for that particular period of time. So if any interruption happen, so that we can shut down that asset. So we can activate here shutdown option. So click on save, and we can go to the activate to activate depreciation key. So we can give that activation button tab, and then here again we are doing that for the write down method, we are calculating for 15 percentage. So these are all for different methods, we are giving different percentages through we are defining this depreciation key will vary for method to method. And then move. Then for the assignment calculation, here he has taken that depreciation key again for write down method, and again yeah, here again, so here assigning that whatever the needed tabs he has given, assignment of calculation. So under that assignment of calculations, here multiple class is a declining balance depreciation, and multiple shift is increase in depreciation and expired useful life, and scrap value is 0, and shutdown is no, we have taken. So we have to select these all tabs while we are doing that write down value depreciation calculation. And then scroll down. See here, determine the depreciation area in asset classes. So we have to determine that depreciation areas for the particular asset classes. So we can do it in OA, Y, Z. So here, when the asset master is created for the asset class, the depreciation terms are defaulted to the master record. So for that purpose, we need to determine the depreciation area on which basis of the depreciation area we are calculating the depreciation for that particular asset. We need to define we need to define that. Move. Yeah, scroll. It will be done in OA, YZ. So see here, he has taken that depreciation area for land asset classes. See here, he has given that depreciation key as a 000. That means here he is not calculating this depreciation through this book depreciation. He is not calculating. He has mentioned that it has a 0% of depreciation. So he has given through the book depreciation. We might activate the tax depreciation, or some other account depreciation we can activate, but he is not calculating here through the book depreciation. It is a 0% depreciation is been calculated. We are not considering here the book depreciation. Then deactivate all the depreciation areas which are not required, and assigned depreciation key triple here. So whatever the required depreciation area is needed for particular country, we will have different depreciation areas now. So those will be only under the activated mode, we can put it activated, or else we might give that as 000. That means we are not calculating that particular machinery or plant this under this depreciation area. We are not calculating, so that we can show it through the by assigning the zeros there. And then so here also he has taken, but here he has mentioned the depreciation key as SL10. That means through the straight line method, percentage of 10%, he's calculating that book depreciation. Here we are assigning. If we are not using that book depreciation, we can give the depreciation key as 000, what we have seen in upside. But while we are using that particular method under 10% for the book depreciation, we have to assign this depreciation key like this. For suppose some other tax we under the tax depreciation we are calculating, means we have to assign that depreciation key, so that we under the depreciation key on which method and on which percentage basis we are taking, this depreciation key will be picked. Yeah, scroll down. So depreciation area. So here also again he has taken, see, for plant and machinery he has taken depreciation key under that WD 15%, that is write down method for 15%. Under the depreciation key, which method we are using, how much percentage we are calculating, and on which basis, that is on book depreciation basis, we are assigning this depreciation to key to that depreciation area. So our for India, we might take book depreciation. Here he has taken for USA, he has taken book depreciation. So that's why he assigned only the depreciation. Remaining all he has put ticks here. That means that is in a deactivated mode. That means he has not considering the depreciation areas for USA country. Then move. Then, yeah, so your depreciation key again, he has calculating through the write down method, 15%. Again, same he has taken for this country. He has picked the book depreciation for all these assets, fixed assets. He is defining through his methods. Yeah. Mm. Yeah. Yeah, again he has see here upside, Gayatri. Yeah, see here he has taken a depreciation area asset under construction. Why? Because we are not calculating any asset for under construction. So here he has taken the depreciation key as a 000. So no depreciation area will be there for this asset under construction. So zeros he has taken. Then we can save it. Yeah. Scroll. Yeah. And then see here again define or assign forms. See here assign forms, we have to go through that OA, assign asset class or history sheet. That means to know that whatever the history of done transaction in the under the land or under the building or under the plant and machinery, to know, to check it, that we have to assign these forms. See here he is assigning a screen, that is layout set name. Here we have to set that, so that we under that land, whatever the depreciations and whatever the transactions done under that one, we can check it by defining the assignment form. So that if we assign that forms here, FIA F001, FIA underscore F001, we can check it all the history whatever we have done under that asset. To check it that history, we can assign those forms. Yeah, save it. Then we can, that is the T code OAOAY. Yeah. Then assign settlement profile to the company code. So code for account, that is account under, sorry, asset under construction. So we can go through that, define that settlement profile, so that we can go to that T code 0K07, OK07. And then here we have to take that one as AI, settlements asset under construction. So here we cannot create new settlement profile. We can use that settlement profile as AI. I think that's it. Yeah, scroll down. Yeah. So here, why this settlement generally this I already told you in the starting that do that from FI to AA. This assignment settlement profile is important to have that asset into that FI. We have to do that assign settlement. So here with this assignment settlement has to be assigned to the company code also through the transaction code OK07, so that we can have from A to FI, we can do it easily. So that is the process here. Yeah, settlement asset under control and company name and company code. That is A1 he has considered. That is by default we have to take it as a A1. Then that's it, I think so. Yeah. Yeah, as per my knowledge and as per my elaboration, I have shared this information. If any mistakes are there, we can have discussion or else we can go ahead. Wind up.
Nice explanation, Rubina garu.
Yeah, thank you, Satya.